So I think it's safe to say that I am a dividend investor. This is my actual main portfolio. It has a value of $44,000. And these are my main six, or my only six investments. Not all of these are dividend focused like VGT. That's a broad market information technology fund. I like to be diversified. But out of my dividend investments, I have SCHD, Divo, JETB, even BST. But you're going to notice a distinct lack of Dividend Aristocrat specific investments. And in this video, I want to try and find out if this is a mistake. Should I, as a dividend investor, just focus on Dividend Aristocrats versus all these other strategies? I have all the data right here. We're going to see how the Dividend Aristocrats stack up against the broad market, SCHD, and a bunch of other pretty compelling investments. So it should be a fun video. If you guys enjoy, leave a like, subscribe, and let's do this. Okay, so the first thing, what is a Dividend Aristocrat? This is a company that not only pays a dividend, but has been increasing their dividends for 25 plus consecutive years. And as of 2022, there are 65 names out of the S&P 500 that meet that criteria. So some of these names include 3M. They are in the industrial sector, and they've been growing their dividend for 64 years, and they currently have a yield as of February 9th of 3.7%. Now this actually makes 3M a dividend king. That's a company that's been increasing their dividend for 50 plus years, and AbbVie is another one of those names. Chevron, as you might have expected, is another one of these names, increasing their dividend for 35 consecutive years. And you can even have Real Estate Investment Trust on this list as well. Now luckily there's already an ETF that is the S&P 500 Dividend Aristocrats, and the ticker is NOBL. And as we just talked about, the index is extremely simple. 25 years, consecutive years of dividend increases. And here's a comprehensive list of all of the holdings of NOBL according to their asset allocation. So some recognizable names here close to the top are Medtronic, we have Pepsi, Lowe's, AbbVie, Walgreens, Walmart, Church & Dwight, T. Rowe Price, McDonald's, and many other blue chip, very recognizable names. And I gotta say, between all 65 names, the weighting or the allocation is very similar and evenly split between all of them. But how is the ultimate performance? So this is a chart of the total return of NOBL in blue against the S&P 500 itself in green. The first thing you should notice is that they tend to trade in a very similar related fashion. Although the Dividend Aristocrats, as you might expect, do have less volatility. So they tend to go up slightly less than the rest of the market. But as we saw in 2022, they are more resilient and they go down slightly less than the rest of the market. And that is why right now it's basically a dead even race. Now you can measure volatility by the beta of an investment, and NOBL has a beta compared to the S&P of 0.74. So I guess the question we have to answer is, does this performance constitute a good investment? And in a vacuum, I would say yes, it can match the returns of the S&P 500, and it does that with less volatility, which might be something you're after. But as I mentioned in the beginning, NOBL isn't the only way to invest in dividend companies. In fact, right here is NOBL against SCHD, one of the most popular dividend ETFs in the market. And SCHD, of course, does not invest based off of the length of time a company has been increasing their dividends, rather things like financial ratios, the dividend growth rate, amongst other metrics. It is important to note, however, that SCHD and NOBL do, of course, share some common DNA, about 14% overlap in total, but there's still plenty of differences. A big one here is that SCHD is much heavier on technology at 16.36% than NOBL, which only has technology at 1.5%. Another important factor is the actual dividend itself. With NOBL, the yield is only 1.92%. When compared to the S&P 500, that's not much higher. So the market itself has a yield of 1.59%. SCHD, for example, that focuses on other metrics, dividend growth rate, has a much more compelling yield at 3.41%. So that's yet another factor to consider here. NOBL isn't a high yield fund, but I might have found a solution to this called KNG. This is another S&P 500 Dividend Aristocrat ETF, but it has a much higher dividend yield thanks to an active covered call writing strategy. So on the fact sheet, it says the index is composed of two parts. So we have the Dividend Aristocrats index itself and a call option strategy on the Dividend Aristocrats themselves. And very importantly, this is only a partial covered call strategy. So they can only write these call options and thus limit the upside potential on no more than 20% of the value of the underlying Dividend Aristocrat index. So if we come over here to ETFoverlap.com, NOBL and KNG should have an overlap of 100%. And that's exactly what we see here. But coming to Seeking Alpha, looking at the dividend data, KNG has a yield of over 4%, much higher than NOBL itself. And in the past 5 years, NOBL, the plain Dividend Aristocrats, have an annual return of 10.87%, and KNG, with its covered call strategy, much higher dividend yield, has an annual return over the same time of 9.58%. So that's about a 1% less return per year in exchange for a much higher dividend yield. So ticker KNG with its covered call strategy could be a great approach if you want to focus on Dividend Aristocrats, but you wanted a bit more of a yield than 1.92%. Although I have to say, again, compared to other options on the market, this still does slightly lag behind. So Divo is a very similar dividend covered call fund to KNG, and over the past 5 years, it has an annual return of 11.3%. That's about 2% higher than that of KNG. And SCHD has a return of 13.2% compared to 10.87% of NOBL. Yeah, so let me know in the comments below. As a dividend investor, do you guys focus on Dividend Aristocrats, or do you have other strategies that you follow similar to SCHD, JEPI, and a magnitude of others out there? Let me know in the comments. If you guys enjoyed and still watching, leave a like, subscribe, and I'll see you guys in the next one.